Welcome to the Wealth Code Pod. I'm your host, Atula Mbigeni, and today's guest sold her first company to Google Waze, went on to consult for some of the largest institutions in the world, and is now acquiring and scaling businesses through her Miami-based fund, Atoms Capital. She is a finance mind trained at MIT and UGA. Justine Avard-Dubont, ladies and gentlemen.
Thank you.
Welcome to the Wealth Code Pod.
Thanks for having me.
Of course. Now, Justine, you went a route that not a lot of people take. Straight after graduation, you went on and pursued entrepreneurship. I want to start there. Can you take us through what made you realize that that's the path that you want to take without any roadmap?
I think I was saying, kind of thought entrepreneurship by a little bit of a mistake/luck, but I did study finance entrepreneurship at Georgia, and while there, obviously, they teach you kind of the fundamentals of running a business, but I think it's really hard to do it on paper versus in real life. So for me, actually, I studied abroad in France, and while there, I kind of came up with this idea of our first company, it was called Swift, and it was based on, it's a carpool app for students, just based on a personal issue that I was having, like getting home on the holidays and stuff like that. And I was, this is done really well in Europe, and let me bring the concept to the US with the US spin to it. So that's how I started, and then I think the school was really good, they had a good entrepreneurship program, so you can apply for grants and get your idea funded. So did that, and then just went on to apply for more accelerators and go from there.
That's amazing. Now, you mentioned studying in France. As you know, you also studied in GA, MIT. How do you think those worlds combine together, your background in that education? How would you say they made you think about entrepreneurship and money?
I think Georgia was, a really good school. I think they did a really good job freshman year and kind of telling your career paths, and down it really did recruiting programs. So I was able to intern in my first year at a pretty big firm. So I think overall, it did a really good entrepreneurship program as well. So you can actually have an idea, get funded and started. So I think it's definitely good at kind of actually doing real life experiences versus just idea on paper. So I definitely love that. As I said, I studied abroad also in France my sophomore year. So being a different culture and kind of understanding how they think was also really good. So I think I did the MIT during COVID because I had some time to do that. So I think overall, obviously the school is kind of what you make it. So I think if you try to use the resources they have to the best of your ability when you're there, I think that's really helpful for anybody.
And then you took that and went straight into being a founder in San Francisco. A lot of people, obviously, that's just a dream for them, but that actually happened for you, and you went on to actually get your company acquired. Can you walk us through that, your business? I know you touched on a little bit on what you were doing with regards to your business. Can you walk us through that whole roadmap of building this business and getting it acquired by Google? How was that process?
So I think my thing was also I figure why not do it stuff and try to build it out there. So we actually applied for an accelerator in the Bay Area, and then we got in. So I think that's probably the best way to get into, the Bay. I think you can obviously go on your own and try to do something, but I think for us, we applied for a program, got in, and then went to do the business out there. And then kind of just by being there, you meet so many connections and be able to expand. So I think for me, I wanted to be in the Bay Area, given that was the prime place to be for a startup. And then I kind of just applied and made it happen, and it was a good opportunity.
What did that exit? Now you're in the Bay Area. Obviously, your business must be doing well in order for it to be acquired. What would you say that exit taught you about valuation, negotiation, and exiting the company?
I think for me, I think exiting is just figuring out the right time. Yeah, I think obviously as a startup, you're constantly fundraising, you're constantly get into the next phase of fundraising. So I think for us, we're doing well. Obviously after family and friends round and our first seed round, we're doing well. But I think at that time, Uber and Lyft were also kind of in the early stages, and they just raised a lot of money. So I think for us, we just kind of figure out, hey, these are the companies that are doing way better. So I think also understanding what can you compete in versus not. So I think we're doing well, but I think the competitors are doing way better. And I think for us, we were working with Waze on a campaign because they were also starting another similar app to us. So kind of just figured the best route would be to sell them the data and then continue to pursue other paths, just because I think it's knowing exactly when to when to exit is also a skill set because you can obviously keep pushing and pushing, but you're just burning more money for you and your investors. So best to just know, I was like, the difference between like being disciplined and understanding when to take the L versus when to keep moving.
And you kept moving right along from being a founder to now working for Deloitte, consulting for some of the largest institutions in the world. What would you say that taught you that entrepreneurship could not teach you?
I'm definitely glad I went to Deloitte after. So I actually was recruiting for Deloitte while I was an undergrad. So I think it was just kind of a easier thing to go back into just because I interned for Big Four firms when I was an undergrad. So it was an easier transition. I think for me, no, I definitely enjoyed my time at Deloitte, and then also I was at KPMG after that. I think having a structured learning is always good. I think startup, you kind of learn everything from yourself and from the ground up. And I think for me, going to a bigger firm in which to have structured learning and structured opportunities is just, for me, was the best opportunity at that time, and definitely learned a lot from being at a big firm and knowing how to run a company into that size, because I think that is important for all of us to learn how to run a company from that size before you build something else again, just because it is just different skill sets to like run a small company versus a mid-size versus a multi-million corporation. So be able to see that live and then working on a big team, a global team, I think just seeing that is also you learn a lot from that. So definitely great for the opportunity.
What patterns would you say that you were able to detect that also helped you with this entrepreneurship while you were at Deloitte?
I was working on some emerging markets, and then, so personally for me, I also wanted to do some work on the continent, so I was like definitely doing some more research on that market. I think for me, I think I'm kind of a bias towards, developing markets. I think it is hard to do on a small scale, so I think, as the Deloitte, you can obviously do much more work on a bigger scale versus other bigger firms. I do think definitely working in emerging markets is a little harder for a smaller company, just given it is very complex and things are always changing. So I definitely enjoy learning about it more from a big corporation side. And I've seen it both sides from big corporations. Also, I have colleagues who have done smaller things in the international market. And I think it is just challenging as a smaller firm. And I think big firms do have that advantage of just being able to withstand the complexity of working overseas on an emerging market. I think, and a big part of it is living there. So I think unless you're willing to go for a decade or so and really get it off the ground, it is a harder pursuit, I would say.
I want us to talk a little bit more about your current company, Bantam's Capital. Now, you went the route of acquiring businesses that are already existing, while the rest of the world, most of the time when we think about business, we think about starting one ourselves. Make the case for starting a business versus acquiring a business.
I think they're both challenging in different ways. So I think after my time at consulting, I did move to Florida to try something new. I also wanted to be in warmer weather. It's just kind of part of the reason I moved here. But I think when I came, again, I didn't really know about the ETA world. I was just kind of researching, businesses to possibly buy and just doing some more research myself and kept finding an opportunity. That was pretty great. So I ended up buying it. But I think they're both challenging. I would say a mistake will probably just not having better financing structure. I think with the small business, same with I was saying before with international versus local, having enough capital to withstand turbulences is important.
Right.
So I think anything you do, I think is forecasting cash flow is really important. So you do have leadway in case things. I feel like in this economy, there's always surprises that you don't really plan for. So I think in the startup or in a buying a company, I think it was forecast 3 to 6 months in which things are not as planned. I think just having that back in your mind is really important.
Now, I can imagine, of course, a lot of due diligence has to go into, as you mentioned, you have to forecast for a lot of uncertainties. Can you take us through that process of finding these deals? Where does one find these deals of these businesses? How do you even do that due diligence just so that you are kind of preparing yourself not to walk into a trap?
I'm in a few ETA groups, and I think there's a lot of Googling. There's a lot of sites like Biz Buy Sell, and there's Baton.com as well. That's pretty good. I think there's a lot of now brokerages firms that are doing a good job at bringing you businesses that you can possibly buy. I think working with the broker is also a pretty good idea. If you Google and find one and then kind of tell them your criteria and then go from there. But I think the business part is just, you do need to get into the numbers and understand the business a little bit and kind of go through line by line of like understanding what's going on in the financials, which you could do yourself or obviously hire a third party to do that for you. So that part gets it pretty straightforward. And I think just understanding like the whole business model of like what exactly they're making and not making, revenue, expenses. I mean, there's always success stories and also like not success stories. I think like people have done tons of research, but also sometimes you do just end up on the bat end of the stick. And I think those are rare, I would say, but it is still like it's a risk regardless. And then I think the ones who have done like multiple years of research and like make sure the opportunities, as it says, have done really well. So I think it's more of just like giving yourself enough time to do the research and not rushing into opportunity just because it's there at that time. So I would say most searchers spend like around 2 years to search, which is a long time, but I think, as I said, there's definitely a lot of nuances, especially like depending on the size of the business, that you need to understand first.
You make it sound like it's such a simple thing to do. It sounds like your risk tolerance is really high.
I think my risk tolerance compared to others is a little higher. Like I said, I've done a few startups. I've done the ETA round now. So I do think my risk tolerance was higher earlier in my career. I think now I am leaning more towards more stable investments, just because I think if you're young, definitely taking time to learn and test different ideas out is great, and you're learning so much. I think I'm in a few ETA groups now, and people do share the different businesses for sale or like things are closing on, and that's like really good to see, like people around you doing a similar thing. And I think I definitely have a higher risk tolerance, but I think, like I said, now kind of scaling it down just because I got all my learning out of the way, and I think now I'm being more on a stable business model, and I think that's why, for me personally, kind of leaning more towards mid-sized to higher companies, just because I think that is a little more stable just to weather the storm. I mean, I just feel like right now with AI and just so many things, that there is so many turbulences in the market, and I think these things are changing daily. So I thought back something else, go back to the mid-sized firm, just because they do have more bandwidth to withstand the challenges right now in the market.
And what are some of the biggest misconceptions when it comes to hiring a business?
I would say the biggest one is you think you work less because it is still a job in the day, and I think a lot of people misunderstand that, because I think, you're not a silent investor. You're gonna have to be an active investor in these kind of businesses, so you are working to get that done. So I would say that it is definitely a lot of work the first couple of years that you have to kind of put in, and understanding that's just kind of it is what it is. I think once you kind of stabilize and you kind of take a little bit of step back, but I think that's why I think buying a smaller business, you are kind of more ingrained to the day-to-day. I think the mid-size, you can obviously hire more middlemen between you and the customer, so yes, you are kind of a little bit more on the higher, but it is still work, and it's not just like, I just buy and I just sit at home and relax
and watch the money.
It's exactly not how it is.
Now, when you buy a business, you're buying its culture as well, its problems. As you mentioned, you never know, especially with the current market. How do you handle all of that without obviously breaking down what already is working for the business?
I think it's just time and time to learn. Obviously, first couple of months, you kind of learn what things are going and how things are operating. I really don't change much in the business. My business that I bought, I didn't really change anything in the first year, just because you just want to see how things are as they are. And I think year two, and then you can obviously add on changes and update. But I think you need a whole year to see kind of how things are operating, and then as time progresses, you can update things as needed.
I want to talk about another venture. As we know, you wear a lot of hats.
Too many hats, actually.
Tell us about what Esalen is solving. What problem are they solving? And how did that venture come about?
Yeah, so with my ETA, and said, buy the companies, stabilize it, and figure out how to find a partner with that. So I do have a partner for that now that is a stakeholder. So that just took some time to kind of step back and figure out what I want to do next, and met a colleague who was working in this space of financing for athletes and be able to educate them on financial literacy and all things accounting. And I'm really passionate about sports, so kind of just aligned. So I am now helping them kind of just get up to speed and raise funding and expand that portfolio. So the base of the company is that we're an accounting and finance tool for athletes. So obviously athletes are 1099 employees, they're making money, and also content creators are making money obviously like not on a W-2. And I think with that, you need to like, make sure your tax strategy is definitely up to speed and all things are compliant. And I think with that, having a team who understands sports, financing, sports, and accounting is really important. So we'll build that team out. And the goal of us long-term is to be able to have like one ecosystem for all things accounting, finance, and also like money management and credit cards, debit cards, all of that. So we definitely have a lot of like big plans for this, but that kind of recently joined the team and we're trying to raise funding and expand that.
This business came about because there was a gap. What would you say is some of what the current athletes are missing, or what's wrong with the way that they're currently being advised when it comes to managing their finances?
I think, with anyone, I think money management is a skill everyone have to learn. I think there's a lot of better tools now in the market that would help you better understand how much you're spending. But I think, again, athletes are obviously they're younger and younger now, and now that kids can get paid in college, it just adds additional complexity of like getting money at an early age and then not understanding financials could be obviously a mess. So we're trying to help educate them on like what is proper saving strategies, how much you should be spending, how much you should be saving. So right now they don't know. I think either their parents teach them or their coach teach them, but it is a rare skill if you're like 18. So I think we just want to kind of come in early and help them to understand money management skills.
Does it now only focus on the much younger athletes, or
all across the board? We're focusing on getting in early just as an easy way to educate them, but I think going forward we want to expand to all athletes.
does it also help them filter through what types of investments that they make for themselves in the future? I can imagine, obviously, once they get that amount of money, they must be flooded with tons of investment opportunities.
Yeah, so I think that's the goal, is like the long term, want to be again one-stop hop for everything. And right now, I think professional athletes have so many people on their team. Like you have an accountant, you have a wealth manager, you have a coach, and it's a big team. I think sometimes they don't talk to each other, so it's a little bit complicated to understand your financial situation all at one place. And then I think that's when they make bad decisions. They're not able to think long term. So that's the goal for us, like long term.
Talking about investments, you yourself have a global finance background. How would you say that shapes what your approach is with Aslan?
I think first we're building obviously our company is based in the US, but I think obviously we're planning the goal of hopefully expanding. There's athletes all across the world, so I think we're kind of using this niche as like the niche we want to focus on. I think our next niche is creators as well. So I think with that, we can definitely hit it can be a global company down the line, because everyone who is an athlete or a creator have the same problem around, obviously, bookkeeping, taxes, understanding finances all across the board. So that's kind of our plan.
Right. Now, with all these ventures, with Aslan, with Atoms Capital, it sounds like impact is the forefront of what you are doing. What does that actually mean in practice to you?
Yeah, I think that's a good question. I know. I feel like obviously the things that I do, I'm like passionate about. So I think by default, the passion is there and the impact is there just by default. Being something that I really speaks to me, and like I think that makes the job a little bit easier if you really like what you're doing and the vision of the company. So I think for me, kind of aligned that all the things that I work on, I really enjoy. But I think that's kind of the benefit of buying a company or starting one, is that you actually enjoy the topic that you're working on. So that's been pretty easy to kind of like figure out the impact, because you enjoy the company and like obviously your team that you're working on and all of that.
Now, talking about enjoying, because it sounds like you enjoy investing. What would you say, and these are like one-word answer questions, the first thing that comes to your mind, this is a fun round.
Okay.
What would you say is the best financial decision you made?
I would say buying the first ETA company was good.
And your worst financial decision?
Buying the second one. I think we were buying the second one. I think we like grew a little bit too fast. I think that's kind of like part of the process, is like knowing, because there is growing pains, like going from like 50 to 100, like in between that, you're kind of like losing money, because just like accounting for like return on investment. So if you look at it that way, for you to double your money in between that, you're kind of not optimizing operations, because until you get to the 100, it's kind of just limited operation. So I think for me, I think that's kind of like a lot of, I've seen that across the board, is just like companies not understanding growth patterns, which I understand for myself. I think growing too fast and understanding all the metrics around getting from like 1 to 2, like all that in between is just kind of, again, not bad, because it just kind of has to happen, but in between you are losing you're not optimizing the company as it should be until you get to that next hurdle. Because if you obviously, for example, buy a house until all the rooms are rented out, you're kind of losing money. So I think for a company, like if you buy one company, the goal is to optimize every room, and then by the next house, you have to optimize every room. So I think if you buy, using that example, if you buy a house too, you go and rent out one room, the two other rooms are just kind of wasted space until you find a renter. I mean, that's the same for buying a business. Like until you optimize everything in operations, you're kind of not at peak capacity. So, but it is kind of just the name of the game. I think understanding that is really important.
I like the way you think about business. It sounds like you're very practical just by that example you just gave. Now, what are you reading? What's one podcast or book that kind of makes you think the way you think about money, about business?
I think I'm reading a few different things. Definitely like not as much podcasts these days, but there's a lot of like startup books that I've read. I think Startup Checklist is a really good one. Kind of going through kind of what all you need to a successful company. Just another book, Change Your Brain Every Day, which was a good one. I think more on the reading side than podcasting these days, but for so many, I feel like they're all kind of blanking right now to me. But definitely more books than podcasts.
And what's one thing you wish someone had told you before you bought your first business?
I think it's more around optimizing the company. Like I said, it's more of like that issue of like, until you reach peak. I think understanding the metric, understanding the numbers. I think we all, and I've seen this online many times, people buy businesses or like they start a business, and I think growing from like 1 to 2 is a hurdle unless you understand all the numbers required to get there. So I think understanding the numbers really in depth, and then making sure that you're not in the negative until you get to the next hurdle.
Justine, you've definitely taught us a lot today. I'm sure someone in the audience is watching and is probably sitting on an idea or just thinking about starting a business or even acquiring a business. They've learned a lot from you today. Now, if they wanted to connect or just like follow, companies, where can they find you?
I'm on LinkedIn, so definitely LinkedIn, or I think I check LinkedIn DM, so if they want to connect there, we can connect there.
Wonderful. And if there's one thing that you'd say to the audience, that one person who's sitting on that idea or thinking about starting or buying a business, as I mentioned, what are your last good words that you can say to kind of encourage them?
I would say actually, I really found them really helpful, like the YC Commodore application. So we applied for that back last year. And I think there's a lot of people have ideas, but I think executing is different than having an idea. And I think I do like the YC application. It's kind of actually in-depth question that you have to answer before you apply. So I think applying for something like that just kind of help you think through the whole, like, okay, you have an idea, but how are you going to execute? And I think that was the question is on there. So I would say about like applying for like different accelerators or combinators, just to understand how they think about businesses, so you understand what to actually like do in your real life business. Because I think getting from idea to like an exit is not easy. So I guess figure out like definitely before you start and like spend the money, how you're gonna actually finish is really important.
Well, thank you so much.
Of course.
And that's it from the Wealth Code Pod. Catch us again next time with our next guest.